Welcome to Fomo Consulting for your daily AMC stock analysis video on Wednesday, May 5th. Ladies and gentlemen, tomorrow is going to be absolutely huge earnings after hours, and I am completely bullish and excited about what to expect. Certainly, I'll have a prediction at the end of the video, and as always, the apes are winning, diamond hands are winning, and most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, comment, and subscribe. I would certainly appreciate it as it is a new channel. Let's get into the video. Thank you as always to everyone who has liked, shared, commented, and subscribed. I very, very much appreciate it from the bottom of my heart. So let's start with a quote. I had hope, however, I had been wounded 7 times during the war, and once before in this same lung, and I did not believe I was going to die. From the outlaw Jesse James. I do believe we have been wounded 7 days in a row. We have 7 red candles, but ladies and gentlemen, we are as strong as ever. Everything is lining up. So let's look at the broader market today. Overall, not an absolute terrible day, but the decliners certainly outweighed the advancers today. Dow was up slightly, NASDAQ was down, did have a recovery in the morning, and then they all kind of fell off and then kind of consolidated throughout the afternoon. S&P basically flat, but once again, tech took a big hit, as you can see. So let's look at AMC today. How did it perform? So it was down less than 1/4 at 22 cents. We closed at $9.17, down 2.34%. I am not concerned whatsoever. It did follow the general trend of the broader market today, as you can see. So again, no big concern there. We've been pretty much falling victim, in my opinion, the last several days of the broader market correction, if you want to call it that. So again, no worries whatsoever. Tomorrow, I believe, is going to be a big day. So quick look at AMC and GME side by side on the bigger picture, and it is scary how similar these two stocks are behaving to one another. They certainly connected in many ETFs, but if you look at just the trends from the baby squeeze for AMC and the mother of all squeezes for GME, they are certainly nearly identical from that point forward. So it's an interesting look. Just wanted to share. So again, when in doubt, zoom out. I know we've had 7 days in a row of red, but again, it is not the biggest thing. We've been there, done that. We have been in this range many times. Not concerned whatsoever. Still on the uptrend. So again, I want to show them kind of a larger view over the last couple of months leading up to earnings. I know I've shown this a couple days in a row now, but we had 4 red candle days leading up to earnings. We had a little more of a bullish push leading up to earnings a couple days in advance. I do believe we will see a push tomorrow, in my opinion. If I was a short, I would not want to have my position without covering leading up to earnings. Again, the returns have been exceptional over the last year, months. It's just incredible for AMC. So again, if you, depending on when you invested, I certainly have no doubts in my position, and I would hope you don't either. So let's look at the options today. Not a ton of big purchases, but there was an $11 strike call expiring May 14th, nearly 1,400, a little over 1,400 contracts. That's a big bet. And a $14 call expiring May 14th, 600 contracts. So again, overwhelmingly bullish, and I'll show you why shortly. Again, I still believe the battleground this week is between $10 and $12.50. Leading up to earnings, again, I believe the next 2 days are going to be very exciting. We'll see how they play out. This is pretty much incredible in my opinion. Yesterday we were at basically a 3-to-1 on and trending towards bullish. Today we are nearly 4-to-1 regarding options and the bullishness of them. Calls far outweighing the puts. So again, this has been trending very bullishly over the last few days. So this is probably one of the more interesting things I've been thinking about. The obviously the annual shareholder meeting that got rescheduled actually yesterday, and trying to figure out why, right? I think we all are, but I think we're all expecting from a catalyst we could get the share recount info this week during earnings. Who knows? Earnings are tomorrow afternoon, 5 p.m. Eastern, after hours. Then you have the NSCC rules and regs coming in into play, so that is very bullish for us. So let me show you why I believe moving the annual shareholder meeting may have been one of the greatest deceptions we've seen in quite some time in the corporate world. So let's go back to the Second World War, D-Day, Normandy beach landing. So in the weeks and months leading up to D-Day, the Allied forces of the United States, Canada, and Great Britain all assembled a great deception. They started amassing forces around the shortest point between Great Britain and France, including using fake equipment, fake military equipment, false radio communications, their own version of FUD, basically, to deceive the Germans into believing the landing spot would be at Pas de Calais. The day before, they were anticipating landing at Pas de Calais. The Allied forces abruptly assembled the largest amphibious assault team with aerial support at another location, which were the beaches of Normandy. The Germans completely got caught by surprise. They assembled at the shortest point, not expecting this to be the landing area. That was done literally a day before as a sneak attack. Again, I believe yesterday's annual meeting move was very calculated. I believe it was to help rid some of the shorts, keep them off guard. I believe, based on what Adam Aaron said today about the 3 million individual investors, is very telling. And let's get into this. So if you have 3 million individual investors, and you're going to see a lot of DD around that on StockTwits, Reddit, and this and that, and we can do our own, but they know something we don't. So I believe that annual shareholder meeting was a deception in advance of the earnings. And let me show you why I believe the earnings is so important, because if you recall, AMC has moved up their earnings. They haven't pushed them back. If you recall, the Q4 earnings were actually pushed back because the earnings were not expected to be particularly good. So again, the earnings meeting tomorrow after hours, 5 p.m. Eastern. Please sign up if you want to listen to it. But let me read you this brief article. I was doing some research on why a company would move forward or move back their earnings calls. So it says, bad news travels fast, but according to research, not for corporate earnings calls. Researchers at the University of Texas and MIT have discovered hidden information contained in when exactly companies choose to schedule their quarterly earnings releases. If a company schedules its earnings much earlier than normal, then earnings are often better than expected, and share prices gains typically follow. Conversely, if they push them back, that can be a bad sign. I believe they moved the earnings call up knowing their own financials better than anyone else, right? They are certainly estimated to improve close to $2 EPS. I believe they know something we don't. Uh, they pulled the annual shareholder meeting out right at the last moment and rescheduled it for months away. Very, very reminiscent of the D-Day invasion deception. Here are the latest estimates. Again, the average estimate is around $150 million in revenue for Q1. The average estimate for EPS is to lose $1.30. If you recall, the EPS actual came in at a negative $3.15 in Q4. So that's nearly a $2 improvement, which is huge. That shows the company is absolutely recovering. So this is a piece of news I believe got overlooked, and anyone who is listening to this or watching this video in the European realm, Great Britain, congratulations. Odeon, which is a wholly owned subsidiary of AMC, their second largest movie chain, confirmed it will reopen most of its 120 theaters on May 17th in the Great Britain and European market. That is absolutely fantastic. That is 14 countries in Europe and 2,900 screens. That is huge, absolutely huge, and that's going to bolster AMC's quarterly earnings for Q2 substantially. In and above other titles that are coming out, likely Godzilla vs. Kong will open in the European markets as well as others, which again will make the Q2 earnings, I think, increasingly bolstered. And again, that might be part of the movement from the annual shareholder meeting closer to the Q2 earnings call. So again, everyone I know is a buzz about NSCC Rule 801. They're waiting for 002, 802. Some of this goes into effect this Friday. We're waiting on a couple of these other piggyback rules, but this could be an absolutely huge catalyst to finally expose some of these failures to deliver, synthetic shares, whatever you want to call them. So this, again, could be a huge catalyst for us. So let's look at just real quick the March earnings and how the stock reacted leading up to it. 4 red candles in a row leading up to earnings. Earnings in March 10th popped, and we ran up to $14.54 shortly thereafter. I personally, not financial advice, you take care of yourself, but I personally believe we could be in for a very similar run-up. So I've showed this a couple days in a row, but I do think it's very relevant leading up to earnings. This is how the stock performed leading up to earnings. That big dip is certainly relevant. 4 red candles in a row. All of the indicators around short interest, free float on loan, shares on loan, certainly were trending downward. That shows that the shorts were exiting their positions rapidly as the price rose. They had to cover, as you can tell by those big green candles. Of course, the gray volume bars are where they borrowed shares to short it back down. So you can see there's a trend there. If you look over to the right, again, you can show where the borrowed shares are declining and the indicators as well as the other key data is as well. So let's look at what they were up to today. So this are the return shares by the green arrow. Return shares are on the left. Borrowed shares are on the right. So this was around opening this morning. So they started out returning about 800,000 shares, and they borrowed 2.6. Go figure. They slammed the price down at the open, right? So as the day trended, they returned 34,000, borrowed 2 million. Returned 1.1 million, borrowed 3.56 towards the end of the day. That is very, very relevant because right now, as I'm with my diligence, they're probably holding an additional 2 million shares anticipating that the price will run up, and they're holding those, whoever it is, to short it right back down. That has been their MO. So this is the stock chart zoomed in leading up to the November earnings call. If you look 7 red candles in a row, seem familiar? Very low volume. So again, theaters were completely closed at this time. These earnings were reported through the end of September of 2020. So let's look at what happened shortly thereafter. Shallow MACD, very similar to where we are today. Orange bars, the earnings call right after earnings. What happened? We went from $2 up to $5 in a matter of a couple weeks. Again, theaters were completely closed, but there was still a very bullish sentiment around the company at that time. So let's look at the Ortex data leading up to that November call. So as you can see, several red candles, 7 at least, leading up to that earnings call. You can see the great volume bars. They were borrowing shares in large sums, preparing for the price to run up so they could short it right back down, as well as keep it short and press the price, and it got to around $2. Shortly thereafter, you can see the tallest green candle got to around the $5 level. So again, one more look. I did a little math around the volume for the days leading up to that earnings call, these 7 red candles in a row. You can see the daily volume was extraordinarily low, around 10 million a day, which makes it very easy to press the price down when you don't have the upward momentum of heavy buying pressure, right? But if you look at the far red candle where we got $4.39, you had 132 million in volume on that day alone. So you can see what volume certainly does for us, for the stock, to get us moving higher. So we certainly need that, and I believe that will come over the coming days. So let's look at today's minute chart. And I know everyone looks at that little minute chart and drives themselves crazy and gets mad and wants to throw their phone or their computer every single day because it's rinse and repeat, right? Opening, they slam it down and then trickle it down. So let me show you the first 10 minutes of today. And again, this is not all selling. There was some buying, so I'm just showing you the volume. 2.64 million in volume in the first 10 minutes, in the first 10 candles. That is 17% of our volume today in the first 10 minutes. If you don't think, and most of that is selling, as you can tell, if you don't think they don't want to slam it down at the beginning for 2 reasons. Number one, to gain a better entry price, so when they do cover, they can buy in at a cheaper price, right? There's a strategy there. But I also believe it's very, they know you're watching. I believe it is very psychological. They want to demoralize you, demoralize me, demoralize us all by keeping the candles red, by slamming it down at the open, make sure that there's no bullish sentiment from the opening bell. So I believe there's a 2-pronged strategy. Number one, buy in at a cheaper price. Number 2, I believe it is psychological around the sentiment to pretty much ruin your day. What they don't understand is apes do not care. So let's look at the Ortex short data. Let's look at the bottom. Let's look at the institutional ownership. You've got one more institutional owner, a total of 407, buying and increasing daily, increasing their positions daily. Still at 79.1% owned by retail apes, diamond hands, and retail investors. Total volume today, 15.6 million. Sound familiar to what I just showed you? We were around 10 leading up to the November call. Today, those first 10 candles were 17% of our total daily volume today. Short shares available, 250,000. Take that for what it's worth. I know at the beginning of the day, we were around 2.3 million on Fintel. As I showed you, they are holding about 2 million shares. Short borrow fee 11.15 on Fintel. So looking at the Ortex data at the top, you certainly see where there's been a decrease. Short interest 22.74 of free float, down just a little bit. Percent of free float on loan 35.12, down just a little bit. Shares on loan 146, basically 147 million. That's gone up actually just a bit. Understandably, we've got 2 million shares additionally on loan. Days to cover has been spiking substantially over the last 2 days. We're 1.52 days. I do believe we're in the 3 to 4 day range currently. The cost to borrow has pretty much been steady around that 13-12% range for the last couple of days. Still very high utilization, 99.75. I do anticipate that will go up to 100 tomorrow, but usually once you get to 100, it's kind of hard to bring it back down until you pop, right? And again, 2.7 million failures to deliver shares as of April 14th at a price of $8.84. Again, we all believe there could be millions, if not a billion, right? Depending on your own due diligence. So let's again look at the data leading up to the March earnings call. You can certainly see where they got out. The indicators currently, you can see where our red candles on the far right. We've had 7 red candles in a row. This is 1 day behind due to the data source, but you can certainly see where the indicators are trending low, very similar to early March. So I've shown this a couple days in a row, but I want to make sure I get my point across. They start out, let's just say they've got the 2 million shares they borrowed today, right, on hand. First thing in the morning, what are they going to do? They're going to take those 2 million shares, they're going to slam the price down, right? They're going to short it down, then they're going to return them. Then they'll borrow more shares in anticipation of the price coming up, or they're trying to cover. What they're doing pretty much daily is slamming it down, getting it to a price to cover, and then the computers, in my opinion, take over from there because we don't have a lot of buying pressure or a catalyst. And then they incrementally reset their positions. As you can see, the little spikes, you have green candles, you have red candles. Green candles, they're incrementally basically recycling the shares, real or not, through the system. They're keeping the borrow fee down, they're keeping the interest down, and they're covering their positions incrementally. However, the end result does not change. They still have millions, if not a billion, shares out there. They're just recycling, but they do have the ability to press the price down. Again, bigger picture, rinse and repeat, right? Have the borrowed shares, short it down, return the shares, borrow more shares, short the price down, over and over and over again, especially without a buying catalyst. Our buying catalyst will break that cycle where they will immediately exit their positions. They are opportunists. They know the market has been struggling on the broader level. They are shorting many stocks, not just AMC. They are making money right now from a down market. As soon as the correction finishes up, whatever that's going to look like, and we start heading back in bullish territory, they will have no choice but to exit. Again, bigger picture, you can certainly see from baby squeeze on the amount of borrowed shares. That's where I believe they got in trouble. They have borrowed way more than they can ever short, which is why I believe, you talk about bag holders, I believe they're bag holding millions and millions of shares right now, synthetic or not. So as always, I have skin in the game. I have bled 7 days in a row, just like you. I am in this diamond hands all the way to the end. I'm right here with you. So I still believe in my 12 to 1250 bold prediction for the end of the week. I believe tomorrow we should, in my opinion, not financial advice, do your own DD, but I believe at some point tomorrow they will begin covering and getting out of the way. They are a little wiser than us about inside information. I cannot imagine they do not believe what I just told you, which is they moved the earnings up. Earnings estimates will likely be doable. I cannot imagine the AMC would put out numbers and not meet those estimates under the current climate. So I believe meeting and likely exceeding the numbers is certainly in our favor. And I do believe the rest of the week will be very bullish as they get out of our way. So last quote, the best way to guarantee a loss is to quit. Morgan Freeman, great actor, great man. I completely agree with that. And I completely believe no one listening to my voice is a quitter. I do not believe anyone is getting out of their positions. I believe the apes, diamond hands, and retail investor are in this. We've been through a lot together. We've been in the $9 level, we've been in the $8 level, we've been in the $7 level, and we've been to the $14 level. We've seen some wild swings, and this is no time to be afraid because we've already been here before. So as always, I want to thank you all for watching. If you enjoyed the video, found it informative and entertaining, please like, share, comment, and subscribe. I would certainly appreciate it. Again, it's a newer channel. And thank you again for watching. And as always, I hope your life is full of green candles. Take care. I'll talk to you soon.